You're listening to Black Parents Aging, where we help you navigate caring for aging loved ones. Every Wednesday, we'll discuss how to help your parents successfully navigate this new season of life. We are going to talk about legal, health, technology, and finances. Here's your host attorneys, Olivia Smith and Nicola Robinson.
Hello, everyone, and welcome back to another episode of Black Parents Aging. It's Olivia here. We don't have Nicola for this episode, but we do have a guest. And I think this is going to be a guest that brings you a lot of good information that you may or may not know that you needed. So help me welcome to the podcast, Jeff Morris. Jeff, welcome.
Thank you. Thank you.
I am so glad we were able to get this scheduled and have you on. Jeff is a financial planner, and part of his expertise or focus is long-term care insurance. And that is something that we have not covered on the podcast yet, but comes up, I know, in my work every day. And so before we get into the ins and outs of long-term care insurance, I'm going to give Jeff the mic, let him introduce himself, tell you a little bit about his firm, what he does, and then we're going to jump right in. Jeff, take it away.
Well, thank you very much for having me. I have been in the industry for about 15 years. I started as a captive agent with Mutual of Omaha. And if anybody knows about being captive, that means you only can really help clients with things from that company. And long-term care was one of the biggest things that we worked on when I was with Mutual of Omaha, because we served a lot of senior clients. And it was very, very eye-opening to me to know that there was protection for seniors at certain stages of their life. And being in that space at that time really showed me a lot of things this morning or during that time. But long-term care took a turn some years ago because a lot of companies got into the business probably for the wrong reason. Because they knew it was very profitable, because those policies are very, very expensive. They can be expensive, especially if you get them later in life. And a lot of companies got into the business because it was a good business to be in. But what they found out very quickly was people were living longer. And because they were living longer, the insurance companies had to pay out those premiums. And then you started to really see the companies that were in it for the right reasons and the ones that were in it for the wrong reasons. So it really opened my eyes to have a good understanding of how long-term care developed and continues to grow.
So I want to back up just a little bit because I'm always interested. How did you make your way into this field? Is this something you wanted to do like when you were in high school, college, or did you stumble upon this? How did you find your way into this area to begin with?
I went to school for hotel restaurant management.
Okay.
And I was in the hotel and hospitality industry for a long time. I owned a restaurant downtown in Atlanta behind Georgia Tech and did that for about 10 years. And if you know anything about the restaurant business, it is really, really difficult. It's physically taxing, and you have a lot of things to juggle. So after doing that, I said I wanted to take a break. I wanted to do something different, something that would, bring a lot of enjoyment, but I didn't have to be there all the time. And that's when I got into insurance. So, getting into insurance, helping people protect themselves with long term care, disability, life insurance, and then from there, really spun it into the financial planning aspect of it. Because a manager that I met at Mutual of Omaha, he said you have a special way that you communicate with people, and it's not very salesy. It's more personality. It's more connecting, and he really guided me towards understanding what holistic financial planning is. And that's when I that we started our firm about 9 years ago, CPA Allies, and that's what we do. We work with clients from financial planning to investment management. We serve a lot of women, a lot of professional, strong women, and we just help them understand what their dollars can do for them. And it's brought me a lot of joy to work with the clients that we work with, because a lot of times women are the caregivers for their families.
Yes.
And with that being the case, they care for everybody else, and they usually leave themselves last. And that is something that we see with a lot of our clients, that we help them understand what their holistic financial plan can be.
No, that is great. I will tell you, um, we've had our firm for 7 going on 8. It'll be 8 years in July. I don't think I had ever heard of long-term care insurance until I got into the field of estate planning and probate. You hear about life insurance, you hear about car insurance, you hear about medical insurance, but I did not know that long-term care insurance existed. And I know that I am not the only one. So for those that are listening that's like, okay, well, what is long-term care insurance? Before you start telling me I need it, let me just understand, what is it? How would you explain that?
Long term care insurance is protection that covers you when you cannot perform activities of daily living. There are 6 activities of daily living, and they consist of bathing, dressing, eating, toileting, transferring, and continence. So if you cannot perform 2 of those, they're considered that you need, or you can have help with long-term care. Now, a lot of people confuse long-term care with Medicare,
Hmm.
and that's not a good thing to assume, because Medicare does not cover long-term care. Long-term care is something you have to pay for, right? And it's a big misconception that is out there, but it helps people protect their assets. And if you don't have that protection, then you have to utilize all your assets to pay for the care. And then from there, a lot of family members help with with um, with long-term care duties. Family members can really get burned out, because it's not an easy thing. I have a personal experience with that. My sister is my mom's caregiver, and her health has taken a real turn. She did not have long-term care, and you can receive assistance with Medicaid, but if you receive assistance with Medicaid, you have to be below the poverty line. So all your assets have to be out of your name, and there's a 5-year window. And
Hmm.
if you don't do it within those 5 years, then you can be penalized for that.
Yeah, so part of what our firm does is long-term care planning. And so if you have the foresight and you plan ahead of time, 5, 10 years ahead, then you can figure it out. But oftentimes people don't have the foresight or didn't know they needed to do that type of planning, and they are in what we would consider an emergency situation because they need help now. And if they have assets, Medicaid may not be a good option. And so oftentimes if they have long-term care insurance, it can be a stopgap measure because it can provide them with care that they need right now. And so do and before we go on, is long-term care insurance something that even, when you're employed, oftentimes employers have options for, health insurance or life insurance? Is long-term care one of those things that people should be looking at with their employers, or is it usually something you have to get on your own?
It's usually something you have to purchase on your own. I have not come across a case where long-term care was offered as a benefit to an employee, because again, it's very expensive, and employers, they don't want to incur that type of expense.
No, yes. So we talk about, making sure that you're planning early, because the older you get, the more risk you are, the higher it is. And I know we will get into that. What is a good age that you should start looking into getting some long-term care insurance for yourself?
The industry suggests anywhere in your 50s and probably early 60s. So a couple of things play into that. One, having the resources to pay for the premiums is important, and having the health to pass the medical exams is the next thing. So you can have the money to pay for the premiums, but if you don't have the health, you won't be able to pass the medical exams. And a good rule of thumb is your age. So if you're 50 years old, you have a 50-50 chance of being approved.
Wow.
If you're
Okay.
70 years old, no, let me take that back. A 50-50 chance of being declined.
Okay.
And if you're 70 years old, you have a 70% of being declined. So the older you are, the higher your opportunity of not being approved.
That makes sense.
Is. Yeah.
So let's talk about those two things, because you said there are a couple factors. So first is, can you afford long-term care insurance? So tell us what we're looking at and what we should prepare ourselves for when we're talking about the cost or the investment into long-term care insurance.
So long-term care is a premium-based product, and a lot of things go into making that decision. One is you have different levels of care, right? An annual cost for, let's say, a nursing home, a private room, in today's economy is about $112,000 a year. Right? These are national averages. Assisted living ranges between $65,000 and $75,000 a year, and then in-home care, where you have an aide coming into the house, can range anywhere between $65,000 and $100,000. It all depends on the type of care that you would like. Now, most people want to stay at home. They want to be in their own comfort of their own surroundings.
Right.
And that's when you have to pay for someone to come in and take care of you. Now, some people that don't have family, they have to go somewhere, right? Because they don't have anybody to come care for them. So it all depends on your personal situation. But I think you hit it on the head when you said planning is really important, because once the long-term care situation raises its head, it's very hard to maneuver around that, because you have to make quick decisions. because people's health can change instantly. And if it changes within a couple of weeks, then you have to get mom or dad into the facility, and you pay a more of a premium because you didn't plan and you're just showing up, and it's just really tough without planning. But here is one of the things, Olivia. So many people don't think they need long-term care.
Oh
But
yeah.
statistics show that people that are 65 and 65 years and older, that 70% of them will need some type of long-term care.
I think especially as the baby boomers age, um, you especially those of us that are professionals that work with seniors, we are really seeing how important that is. But a few years ago, I had the conversation with my parents, and this was them doing their estate planning. So they hadn't done their estate planning. So I was like, I can't do this work and y'all not have your estate planning.
Right.
So we were doing that, and I had the long-term care conversation with them, and they were upset with me for a week because they were like, nursing home, we're not going into a nursing home. And then my dad came back later and he was like, I never really thought about what if I need to go into a nursing home, or what if I can't care for myself. I just thought me and your mom would get old together. She would help me, I would help her, and then we would die. And I think that's a lot of like people's mindset. They don't really consider the time between good health and death. And that's sickness. And that is the gap that long-term care insurance can fill. But I don't think people really grapple with, there may be a time where I can't really care for myself and I need some help. Which is a shame because, as you said, a large percentage of the population at some point is going to need some sort of help. Can you, in a practical way, discuss if how long-term care insurance works? So say I can't do two of my ADLs and I do need assistance and I do want to stay at home. What is the benefit of having long-term care insurance? What does it do?
There are two different scenarios with long-term care.
Okay.
The first one is traditional long-term care, which is a traditional policy, which is where you pay a premium for, let's say, for example, of 300,000. The benefit is 300,000. You have your elimination period and you have your benefit period. The elimination period is the time frame that it takes for you to have the long-term care benefits kick in. That could be 30, 60, or 90 days, right? A good barometer is 90 days because probably less than that, you can kind of do things for yourself. But then after those 90 days, that elimination period, then it kicks in and it pays you directly or to the facility, depending on how your contract is written. It'll pay them a dollar amount to care for you or to pay for the person that's coming into your home, right? That's a $300,000 bucket. They'll pay up until that $300,000 is gone, right? Or until you pass away, right? Now, if you don't use the $300,000 in that bucket, it goes away. You don't get the remaining of that. That's a traditional policy. Now, what we are recommending now is hybrid policies, where now that $300,000, it's a combination of life insurance and long-term care protection. So if you don't use it, then that $300,000 is a death benefit that will go to your beneficiaries.
Go ahead.
Go ahead. That is a much better solution
Yes.
because it's not a use it or lose it situation.
Yes. Is the hybrid on average more expensive than the traditional, or are they about the same?
Great question. Initially, they are, because you have to pay the larger premiums up front. But On the long, for the long haul, they're not, because with the traditional policies, the premiums end up going up at the end because they
Ah,
know that as you get older, you're going to probably need them more. And if you don't add a cost of living rider onto that, then you really can suffer because now that 300,000 is not going to be worth 300,000 in
right,
today's dollars because of inflation.
right. And so when you get long-term care insurance, it do you lock in a rate or a rate isn't locked in?
Uh, the rate is locked in.
Okay. So you lock in a rate. Is it for a term of years or is it for the rest of your life?
It depends on how the contract is written. You can have it
Okay.
up to 3 years. You can have it up to 5 years, 10 years. But the longer it is, the more expensive it becomes, right? Because the average for someone to be on long-term care before they probably pass,
Mm-hmm.
for women, it can be anywhere from 3 to 5 years. For men, it's usually 2 to 3 years because I know with your experience, when a man goes into one of those facilities, he does not last
Yeah.
long. He just, a lot of times he quits. But women, they meet other women, they are more engaging, they are more they have more activities that they cuz they're more social. When a man
Mm-hmm.
goes in there, his ego gets bruised and he's like, "You know what? I'm out and I don't want to go anymore."
So for families, because what we often experience is oftentimes children and grandchildren are calling, making appointments for their parents or grandparents, and they're really helping them at a certain point with their estate planning, with their elder care needs. If there is a child or grandchild listening that has aging parents, what are the things that they should be considering to determine whether they should look into long-term care insurance or whether maybe they've missed the 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 time
Window.
where yeah,
It all depends on how old the parents are, right? Because a lot of times the parents are not the ones that are looking for this information,
right.
and it's the children because the children see that, listen, I'm going to have to take care of mom and dad, and if I have to do that, then my life gets paused, and it's usually the oldest female daughter, right,
Mhm.
that has to do those things. And having them look into it as soon as possible when they notice different things that they notice a cognitive decline, or they notice that they're missing bills or not managing their money properly. But you have to be aware of your parents because there's a saying that goes, once a man, twice a child, right? And what that means is we'll always be an adult, but we'll be a child twice, when we're born and as we age, because as we age, we need care, we need help, we need direction, and we need guidance. And a lot of times, I know, for your example, parents that are a little bit ornery, if you will, and they don't
Mhm.
want any guidance. But then you have parents who are really cool and laid back and say, I'll let you do what you need to do to take care of me. So it all depends on the individual and the situation.
Also, because we talked about price and you'd said it really depends on a lot of factors, but
Mhm.
also to get long-term care insurance, you have to pass the health part
Exactly.
portion. Now, what are we talking about? Because as you age, you start getting conditions. So, can you
Hmm.
not have anything? Is there like a spectrum of okay, maybe you can have diabetes, but you can't have this? How are they, as much as you know, how are they looking and assessing someone's health?
Several ways. Uh, Medications.
Okay.
If you have any chronic illnesses, because the chronic illnesses are the ones that are not going away, and that is not attractive. That's not a good risk for an insurance
Mm-hmm.
company, because that's what it is. It's a risk that insurance company is taking on you, that you would live a healthy life. They look at lifestyle, they look at family history, your BMI. So
Mm-hmm.
everything that it takes to acquire a life insurance policy to protect your life is the same thing they look for, very similar in what they look for long-term care. And I'll give you an example. I have a client. He is 50 years old, healthy, good BMI, works out, but he has a lot of chronic illnesses,
Mm.
ankle problems, back problems, neck problems, something with his eye, and he was declined for
Oh
disability.
man.
And he has the resources. So it all depends on what's going on internally, and externally as well.
So, what is your advice for a client like that? Is it a situation where if you go to one company and you get denied, you're probably going to be denied everywhere else? Or is each company's equation different from who they will cover and who they won't cover?
Different companies have probably the baseline of coverage requirements, if you will.
Hmm.
But there are some companies that take a little bit more risk, and but you'll pay a little bit more on the premium side. But
Sure.
some people will pay that premium because they want the protection. But I'll tell you this, more people have the resources to pay for the care than are able to qualify for the care. Because you mentioned something earlier in our talk. Their baby boomers are turning 65, 10,000 at a time every day for the next 10 to 15 years.
Yeah.
Just try to imagine that 10,000 people daily are turning 65. And a lot of them have resources, but they don't have the health. And they will
Hmm.
give up all those resources to have good health.
Yes. So for someone like that who has resources but who doesn't qualify health wise, are you saying set up a separate account? Like what can those people do to still be proactive about planning for needing some sort of care in the future?
I think you just hit it. They should set up a separate account. It's called a health saving, or not the health savings account, but a health account where they have resources that will be allocated just for this need. Because in the retirement planning space for financial planning, you have different phases, and we call it the happy phase. When you initially retire, you spend a lot of money on going out, on leisure, on traveling, on doing the things
Mm-hmm.
that you couldn't do when you were working. And then it starts to dip, because it's called the go-go phases, right? And then you have the slow go phases on the bottom, where you're not going out, you're not doing those things. And then on the top, you have the no-go, and that's when you're spending money on health and
Mm-hmm.
health care. So it all depends on how you allocate your resources, and in speaking with someone who's going to create a game plan for you. Because you can have money over here in this bucket, but then you need money in this bucket, but then you have Social Security coming, and then you have a pension coming, and then you have annuities. So you have to speak to someone who can see the big picture and put you on the right track to make sure you don't have any blind spots, because that's what it's about, is trying to eliminate as many blind spots as possible. We can't see everything, but we can at least plan for the things that we know about.
Yeah. So, what are some of the misconceptions you hear about long-term care insurance? And when you're talking to people, because I know we have listeners that are listening right now and they're like, they're trying to sell me something else. They're trying to, what are the biggest pushback you get when you have this conversation with your clients about the need for it?
A couple of things. One, my children will take care of me.
I've heard that one.
that's not right on so many levels, right? Yeah, it's just not right. Because now your child or your family member, your sister, your aunt, your uncle, somebody has to care for you. And now they have to stop their life to care for you. And it's not like taking care of an infant. This is an 80 or 90-year-old person that weighs sometimes 150 to 200 pounds. So it's totally different.
It
So that's
is.
one misconception. Don't take that for granted. Another one is the government will take care of me. That's what Medicare is for. That is not the case. So I have enough money that will cover the cost. No, you do not. Because if it's going to cost anywhere between $60,000 and $100,000, I don't know many people that have that money to pay for on an annual basis.
Right.
That's a salary. That's somebody's salary. And you're not working, so you don't have it coming in. So, yeah. So those are a couple of misconceptions.
If people listen to this episode and they're like, okay, well, let me look into it, what are things they should be looking for in a good policy and in a good company for long-term care insurance?
As far as policy, they want to make sure the benefit period and the elimination periods are what they can work with. They want to make sure that it takes care of them as long as possible. They want to make sure that it has cost of living adjustments, and they want to make sure that all the riders are going to do what they promise to do. That leads into the insurance company. You want to definitely do your research and your due diligence to ensure that you're dealing with somebody that is stable and it has been around for a long time. Because like we talked about earlier, you don't want somebody just getting into the business, because this is a long-term relationship. People are living into their late 90s and some into their 100s. So you want a company that's been around for a long time, and you want a company that specializes in long-term care. You don't want to go to an eye doctor if something is wrong with your ears. Well, ENT, same thing. That's a bad example. Sorry about that. But you don't want to go to a foot doctor if something is wrong with your ear, right? So you want to go to someone who specializes in caring and understanding these policies. And as far as working with an individual, you want to interview folks, and you want to be able to click with the person that you're going through this process with, because you're going to be sharing a lot of personal information, not only about your finances, but about your health. And people will quicker share about their health than they will about their money. You know that, right?
Yes,
Okay.
yes, that is true. So if there is someone that's like, okay, this has piqued my curiosity. I didn't really know about this. I need more information. Where are good places for people to go to learn more about, reputable places that's going to give good information about long-term care insurance?
There is this website called Long-Term Care Coalition, and you can see different names of companies, how long they've been in the business, and the types of services that they offer. But if you want someone to help you sell it, you have to, speak to an agent who specializes in insurances, and speak to a couple of them. You can do some research online. You can speak to different organizations that work with seniors. You can call AARP, and they are able to point you in different directions. But there are different resources. But as you do your research, you'll see names of companies that constantly rise to the top because they've been doing it for a while.
And you do this as well, right?
I do.
So how could, if people wanted to have a conversation with you about long-term care, what would be the best way for them to contact you?
They can reach me either by phone, which is 404-596-8080. Again, 404-596-8080. or they can schedule time on our website, cpaallies.com. That's cpaallies.com. And we'll be more than happy to give them a high-level overview of what we do, how we do it, what their situation is, and point them in the right direction. Because we are fiduciaries. And as a fiduciary, you have not only a legal obligation, but you have a moral and ethical obligation that we have to do what is in the best interest of our clients, right?
Yes. No, I love that. Go ahead, Finn.
Yes, the industry is based and has been fighting with suitability, right? The difference between suitability and a fiduciary is a suitability is she has some needs for a long-term care policy. We can fit her into this. It's suitable, right? Not a lot of backlash. I could really kind of do whatever I want to do. Fiduciary, you have to do what's best. We'll review different insurance companies. We'll review different insurance policies, and we'll make sure we're presenting you with the best solution for you.
No, I love that. And so I want to leave on a happy note because I know it's about time to get out. Do you have a long-term care? I know I'm putting you on the spot. Success story. Do you have clients, maybe a client that you've had that got their policy, that got sick, and long-term care insurance did for that person what it is supposed to do for that person?
I have one. I do. It was a husband and wife team, and they're both pharmacists, right? And I met them probably about 10 years ago. And this is while I was with Mutual of Omaha, and we became friends. They purchased some life insurance, and then they were looking into long-term care because the lady's mom got sick, and she, again, the oldest female child, had to start caring for her.
Mm-hmm.
So that's when we started talking about long-term care for her and her husband. They purchased a plan, and then about maybe 3 years ago, the husband started to have some challenges, and the plan kicked in. They called me, went through the insurance company. We started to get them paid into benefits. He wasn't on it for a long time. He was on it for probably, a year, but it was there to protect them when they needed. And, they were very happy with what I put in place for them because it was exactly what they needed. There were no surprises because you can do a lot of things on the front end. You could say this, you could do that, you could sell whatever, but you earn your keep when the services is needed.
Yes.
And I felt good about that. I really did, because after a policy that's been in force for 8 years, you kind of sometimes forget about it. But when you need it and it's there and it does what you promised it would do, it's a good thing all the way around.
Oh, it absolutely is now. And I feel good about ending on that note.
Yes.
And so thank you so much for taking the time to sit down with us. And for you guys, I hope you learned something new and heard something that is going to make you take action, because really that is what this is about. Get the information, but don't sit on it. Then do something with the information that you receive. As for me, I'm Olivia Smith. We love to hear from you. So if you have additional questions that you have for Jeff, I'll make sure I get them to us. You know that you can always contact us via social media, Instagram, Facebook, TikTok. And until next time, everyone have a wonderful day.
Thanks for joining us this week on Black Parents Aging. Check out our Facebook group at Black Parents Aging, where we go live to answer your questions. For more info on today's topic, check out the show notes on our website, srlawgrp.com. If you know someone who could benefit from today's episode, please share a link to the show. Subscribe to the show to catch new episodes and leave a review. Until next week.